Since the last edition of the Dublin Economic Monitor, the economy has again been in the most severe lockdown restrictions. That has obviously had an impact on business performance, and that is reflected in the data that we present in this edition. We are now talking about a second half comeback for the economy, and we have some optimism that that can hold this time. It's been a difficult path to navigate in terms of calling the economy and calling the recovery. But with lockdown restrictions lifting and the vaccine rollout gathering momentum, we're now starting to see business optimism pick up. We're starting to see recruitment ramp up again, and we have indicators in this monitor from Indeed that show that the vacancies are coming back. So this is all lending to a greater sense of optimism that the economy is about to recover. Also driving that is a lot of pent-up demand. Consumers have been very restricted in the last number of months and indeed the last year. And that spending that hasn't been able to happen and hasn't diverted to online is going to build what we think will be a splurge in spending initially and then drive a recovery towards the end of the year. So it's a mixed picture still, but it's one which is growing in optimism, and we are confident in the second half comeback that we are likely to see in the economy. The labour market has obviously had a severely impacted last number of months due to COVID. Much of the pain suffered in the labour market, though, has been buffeted somewhat by the pandemic unemployment payment supports that have protected a number of jobs. The pandemic payments peaked in Dublin at about 175,000, and we've started to see those come back down now, so they're currently about 125,000. Positively, they haven't shifted into unemployment, and we're not really expecting to see too much of a dramatic move into long-term or permanent unemployment there. As the economy has started to reopen, we're seeing opportunity come through, particularly hotels, pubs, etc., culture and arts, and that bodes well for the labour market. The Dublin property market roared back into life in January of this year as a lot of the pent-up demand and the inability to transact came back on stream. 2,500 transactions in January was the highest in over a decade. The rate scaled back a little bit February and March, but still a very strong quarter in terms of property transactions. In terms of then where the property market is heading, we see the property prices very strong, in fact have reached levels last seen in December 2008. While it's a good thing for those that own a house and those that are maybe trying to transact and sell, it has implications for Dublin's competitiveness and for those trying to afford a home. That's an issue that looks likely to continue. When we look at commencements of residential property are significantly behind where they would expect to be. In fact, 188 transactions in the last quarter is the lowest in many, many years. Retail spending was obviously impacted by the most recent restrictions, and the January sales that would have been a traditional feature of the retail market didn't happen. So consumer spending quarter on quarter down by nearly 4%. We're seeing then a very different story amongst the retail segments. We've seen the discretionary goods and the entertainment sector struggling, and that's no surprise given the scale of restrictions has impacted on those sectors in particular. Obviously the big winner in the last year has been the online retail market. That's up 45% year on year. As the restrictions lift, and as restrictions lifted last year, we did see the peak of online retailing scale back a little bit. The proportion of sales through online peaked at about 25% in the midst of the early lockdowns. That came back and is now about 15%. So we would expect that to come back a little bit more as bricks and mortar retailers open, and that gives some optimism then for trading performance in the second half of the year. The performance and the throughput of cargo through Dublin Port has been particularly volatile in the last number of quarters, and that's not just COVID related. We think there has been an element of Brexit impact coming through in the port. There was a uptick in activity in the last quarter of last year, and now we've seen a 20%, 21% decline in throughput in quarter one. So as I say, not just COVID related, but certainly a Brexit impact there, and we're seeing some evidence of trade moving through different ports on the island, through Warrenpoint, Larne and Belfast. And really it's about how that beds in, and we don't know yet the full extent of the downtick in performance in Dublin Port, and we'll look at that with interest in the quarters ahead. With the restrictions in place, not just in Ireland but around the globe, there's been a significant downturn in traffic through the airport, down 93% in the last year. And when we think what that means, at peak we're talking about 8.5 million passengers through Dublin Airport. That's currently sitting at about 500,000, so significant declines, but again, not that surprising given the context we're in. The ambition, and I suppose the ambition tied very much to the rollout of global vaccine, will be to bring a lot of that traffic back in the coming months and years ahead. The challenge in that would be there have been a number of routes lost into Dublin during the course of the pandemic, and the ambition and the hope must be to try and get as many of those routes back and servicing Dublin again. And then with traffic on the roads, there has been a definite increase in the flow. We have the trackers from across the 8 main routes around Dublin. And what that's showing is that a definite increase in the level of traffic, but still about 13-14% below pre-pandemic levels. That offers an insight into just that re-engagement in the economy as people start to come back into offices and retail, and just gives an indication that there is a return underway. The hotel sector in the city has been under significant pressure in the last year. The last 4 months have borne that out, with average occupancy rates below 20% in each of those months. That's not surprising. It's unfortunate, but not surprising given the inability of us to move between counties and a lack of international travellers. As we move through into lifting those restrictions, the future is obviously brighter for the hotel sector. The recovery should be well underway for the summer season, but the ambition will obviously have to be matched with bringing back the events that have been cancelled and bringing back the international travellers that haven't been able to arrive here. And that's a challenge, and that will take time. The number of international travellers is close to zero. The airport has lost a number of routes, and the need is for that to come back, and the events that drive a lot of the tourism in the city to be re-established in the months and years ahead. In terms of then the restaurant sector, the open table data in the monitor shows that there is a strong bounce back whenever restrictions lift, and we would expect that again as restrictions have eased. We would expect the pent-up demand to flow into bookings for meals, and a strong bounce back in the restaurant sector. The key message within the data of the Dublin Economic Monitor this quarter is obviously one of significant downturn in activity, but the messaging and the forward look would be one of a second half recovery and a optimistic view from certainly consumer sentiment and business sentiment, and we would expect that to drive through to much better performance in the second half of the year.